I'm Chris Frostad. I'm the president and CEO of Purepoint Uranium Group. We are an exploration company looking for uranium in northern Saskatchewan. Good day to you, Matt.
Good day to you, Chris. I thought it's about time we caught up on PurePoint. We talked long and hard about the market. Look, you've had an interesting ride this year. Recently raised some money and putting out some high-grade results with your joint partner, IsoEnergy. Can we just get a little update? I mean, on the money. Just remind me, how was that raised? Where was it from?
The raise actually was all done through charity flow through.
Yeah,
which gave us better than 50% premium on the market. So, I mean, since we did our consolidation late last year and kind of cleaned up our capital structure, we're getting as greedy as humanly possible with our equity. So, I think we're rolling forward. We're going to be able to do that and lean into that on a fairly regular basis when we have to raise money, and that will keep things tight going forward. But it was. We raised $6 million. It was, and ISO participated in that to the tune of $1 million of that, and it went very, 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 very well. It was subsequent to us delivering some decent drill results. So the price was good, and I think we're all kind of heading into a good time now. But it's been a busy year. We've had a very busy year.
Well, I think while you were talking, God's own torchlight is now shining on me. So yeah, this better be good. He's listening. So just on the financing and maybe kind of corporate structure a little bit. I think for people new to this, I want them to understand the kind of your financial makeup. You've also kind of got an interesting business model in the sense that you partner at JV and spin out projects as well, haven't you?
Right. So we have 10 projects in Saskatchewan, and 6 of those are joint ventures. And what is, I think, unique about them is that they're all with significant players. They're with Cameco, they're with Orano, they're with IsoEnergy, as you mentioned. We have a project right now with Foran Mining, who's developing the McIlvenna Bay project there, and they should be in production in about a year. So our approach over time as we've evolved this has been to partner up with folks with much bigger balance sheets than ourselves, who are going to be around for the long haul, that this isn't a quick flip. And that was I think that was somewhat kind of cast in stone when we did our deal with IsoEnergy. That was really the one that threw an umbrella around the whole business structure and how we go at that, because we collectively put about 10 of our individual projects into a big bucket because they were all adjoining and created a fairly large district in the northwest edge of the Athabasca Basin, which is right on trend and works into all of the geology that surrounds their Hurricanes deposit up there. And so with that, we're now in a position where, we've got tier 1 projects in a tier 1 neighborhood. We've got the capital necessary to explore these things properly, because it's very, very expensive from our partners. We have partners who validate the prospectivity of those projects because they wouldn't be throwing money at it otherwise. And we earn management fees because we operate all of those projects, and those fees, pretty much cover, if not completely cover, our annual overhead. So it's a good model for us.
It's a good model, and we'll get onto ISO and drilling and proper in a second, because that's probably the exciting bit for most. But just so I understand it a little bit more, maybe for others too, in terms of charity flow through financing. Can you talk about this sort of what that looks like in terms of the effect of after tax cash available? Can you also talk about maybe the tranches of mixed between sort of Saskatchewan and national flow through, and whether that comes from investor demand, or is it tax efficiency? How do you structure those things?
It's now kind of the charity aspect. Now it wraps another layer around the flow through structure, and what it has done is allowed us to get a lot broader in terms of our investor base. We can get people outside of Canada involved. So it's based on the flow through share structure, which is it's a tax credit allowed by the Canadian government to support exploration. And essentially, for every $100 of shares you buy from me that I'm going to put in the ground, I will give you a $100 tax deduction. you as an individual. And the notion being that as an explorer, I don't have revenues to apply that expense against, but you do. So the government is allowing individuals to take those deductions, and so it creates a huge tax advantage. Now, so what that has allowed us to do historically is do private placements, and the investors are actually getting that tax advantage. So if we're trading at $1, they're going to buy it for $1, but they're going to write that off. So they're, whatever tax bracket you're in, they're only paying 60, 70 cents for that share. So what we then do is we get a premium on the market. So we would typically get a premium of maybe 10%, give or take, and that's the way it worked. Now what they've done is added the charity component, because the limitation of what I just mentioned is that it's only useful for Canadian taxpayers, and it's only good for money spent in Canada. Now what they've done is wrap the charity aspect around it, and the mechanism around that is to say, okay, you as the flow-through fund are going to buy my shares, you're going to donate them to a charity, get another tax deduction, a charitable tax deduction. That charity is immediately going to sell those shares to an investor who will hold it, and the charity gets the money. But they're getting it they're not getting it if I sold it to the charity at $1, the charity is going to get 80 cents on the dollar from a back-end investor. So all these planets have to be lined up. So we have to have a back-end investor who's going to ultimately wind up with these shares in their hands at a discount. And then you've got the flow through the charity fund, typically, who are managing all of this up front, who are managing the mechanisms and the comings and goings of all that up front. And through that, we get upwards to 50, 60% premium. And depending on what province you're doing your exploration in, there's additional tax incentives on top of that.
Right. Okay. I'd never kind of really dug into the weeds of it. Understood. So you obviously based in Saskatchewan as well, presumably.
Yes. Yeah. I'd say about a third of it was in Saskatchewan. So we got 84% premium on that stuff.
Okay. And then in terms of any other kind of available routes, maybe it was $6 million. You don't need to, but did you think about kind of warrant monetization or taking any non-flow through hard dollars?
There were warrants attached to that. But again, we now, because of the movement of our stock over the last few months, we have about $5 million worth of unexercised warrants that are in the money. So we're looking at that right now. That's coming in. And then based on the budgets and things that we see coming up next year, we expect to earn enough hard dollars through operating our projects that we need for the overhead. So, we don't necessarily need hard dollars, but because of this system now, we can accommodate hard dollar type investors that we couldn't before, because they can play the back end to the charity raise. Right.
And does this also kind of, in terms of like strategic management of dilution, you obviously got a few big partners in there, and you got to kind of, you got to keep up, right? Mm-hmm. You got to keep up. So how do you manage that?
Well, we're an exploration company, so we will always be raising money through private placements. So we try and do so at the maximum premium we can get. We're going to lean on this charity flow through opportunity as heavy as possible, because it minimizes our dilution. That's really all we can do at this point.
Yeah.
And the other thing too is because of the different ways that we see money coming in. I mean, also understand that because of the structure of our joint venture agreements, we get their cash first, right? So we map out what we're doing in a particular program, and then on a monthly basis, we actually get their cash, their portion of it, going into it. So we're not carrying the cash flow consequences of all this as well. So it gives us a lot of levers and flexibility to pull on a cash flow basis that allows us to be a little more surgical in regards to our financings. So, we may have seen we raised $1 million earlier in the year. Things were tough. The price wasn't where we knew it should be or could be. So we only raised $1 million. Right. I mean, we can raise just what we need when we need it, and no more. We don't have to, if we're getting a big poke or if something's going on crazy in the markets, we don't have to load up the bank more than we need to.
Okay. Well, look, you've got, like you mentioned, you've got some big partners. You've got Arana, you got Cameco, but I want to focus on the new boy on the block, which is your JV with IsoEnergy. Now, obviously, they've upped their stake. They like what they're seeing, and they're quite good partners to have, and their access to capital is quite useful. So, why? I mean, how's that relationship? I mean, maybe describe the workings of that relationship at the moment.
The structure of the relationship is such. It's a 50-50 partnership on a block of projects, which we've now divvied up into three, that cover about 100,000 hectares of property. So it's a big hunk of property. Because it's a 50-50 partnership, it almost makes it more difficult. And that's what took a lot of time in setting up this agreement, was how do you break a tie if there's a disagreement? And so there's been a lot of work put into that. And so structurally what happens is like with our other partnerships, we will meet near the end of the year, and we will determine a budget and a technical program plan for the coming year. And then everybody blesses it, and come January, we go. And we report on a monthly basis, and we provide reporting, and we meet when we need to, or when we want to change direction. Things kind of flip and flop, as it did this year, and we were running into wildfires, we were running into discoveries that we wanted maybe to stick around and poke a few more holes in, things like that. So it's a pretty close relationship. We're in constant communication, and that's essentially it. Our deal is. Purepoint is the exploration operator, full stop. If we get to a point, or when we get to a point where we've actually defined a resource, then we kind of draw a circle around that, and we hand the baton on that over to ISO, who moves it forward if the decision is to develop that resource.
Okay, so if I look at the way that you work together, yes, in terms of the technical services, data sharing, and the JV structure itself, you seem to be in a good place with them, the good partner to have. In terms of what do they want out of it eventually, and I guess this leans toward, or leads towards, what do your shareholders get out of it? If, say, Dorado, carries on as is, and it gets to a certain size, mm-hmm. Do you look to sort of change the nature of the JV? Because obviously keeping up there financially may be, quite onerous in terms of all the other projects you've got to finance as well. Yeah,
that's the other thing that makes this that makes these relationships, or actually these agreements, difficult. And that was something that ISO learned along the way. This wasn't just a transaction. We're going to buy and sell something. We're going to do this. We're going to do that. We had to define a relationship, assuming that we were going to find something, assuming that we were going to take it into development and production and right to the very end. And so that's all mapped out in the agreement. And when you're dealing with majors, and when you're dealing with larger organizations like an ISO of this mindset, you can't just put at the back of an earn-in agreement, and we'll put together a joint venture agreement under standard terms. Because there's no standard terms to this stuff. It can be very contentious. So in this case, we spent a lot of time working through all of them. When you talk about the finance, so all that's dealt with. How do we finance it? Who can use what as security? Who can make the decision? Can they force us into a situation we don't want to be in, or vice versa? How do we deal with our interests and our ability to monetize it? So all of that stuff is dealt with in great detail in the joint venture agreement, and both sides, I think, are pretty happy with where we wound up.
But it's an interesting one. Whenever you're a smaller company dealing with a bigger company, you assume that you're on the back foot all the time. You want their money. You need security of their money. They maybe presumably have choice as to where they deploy their capital as well. Choosing the right partner, a bit like marriage. Here we go, deep and meaningful conversation. It's a bit like marriage. You've got to choose the right partner, because you've got to have the same outlook on life and the same views as to what success can look like, or it becomes combative.
You see, that's the challenge. You don't have that same view on life. You have to, so that has to be worked into the agreement. The agreement has to recognize the fact that our objectives might be different than your objectives. And so there has to be mechanisms in there that allow us to follow our path if you're going to follow your path. And they're all in there, but it does take, it takes a different amount of approach. I mean, it's very different doing an agreement like this, say, with a Cameco, who's got all the time in the world, who isn't watching their stock price like hawks, who isn't worried about the news coming out of their exploration program next week. Different from that than dealing with an IsoEnergy, and who again is focused on developing assets that they have, and they're a little more transactional, and they've got different focus than we do. So you're not going to find yourself somebody that's aligned, who's exactly like you are, who's going to do this thing. That doesn't happen. So it has to be built into your agreements.
Right. Okay. No, I get it. I think that's what I'm getting at. Is like you've got to kind of stand your ground. If you're the smaller, you've got to stand your ground. I'm not, because no one wants a prenup here, but you want something.
That was the argument. I mean, what you were laying out is actually our argument, right? They want to do X, so we can't do X because of all the things you just said. It can't work that way for us.
Yeah. Interesting. But once that is written, agreed, signed off, in place, everyone knows where they stand. So I guess for me, the original question was, where does something like Dorado need to get to before they kind of pull a trigger and say, right, we need to finance this and get this thing moving? And obviously for you've got a little bit of a line of sight as to what that could mean for you. Where are we? Like that's the headline that came out recently.
Yeah.
Right? So let's talk about that one.
Right now, I think we're all in the same boat in terms of our objectives, right? We're trying to find something, and what we see with Dorado is, I mean, before it gets handed over to them, before it turns into something that both of us are going to be able to really capture any value on it, we have to find and define a resource. So where we are right now with Dorado, I mean, we're not trying to fool anybody here. We're on the edge of something. We don't know what that something is. But we do know we're on the edge of something. 98% of the drill holes that get poked up there in Saskatchewan come back with this much uranium. We've just poked 4 holes through a lot of uranium, but it's only 4 holes, and it's in a structure. It's given us an understanding as to where we can go, and we have to carefully and systematically move out from that. We believe it goes to the north, but we got to test to the south. We got to check it out at depth, but what we know is that we have got an area that has got an obvious mineralization event that has left behind some significant high-grade uranium. And as we move into this coming winter, we'll be putting a lot of effort into drilling as much as we can in a very systematic manner to move towards whatever direction this uranium takes us, and hopefully it takes us into a massive, massive lake of uranium.
Okay, but let's maybe, like, I do want to talk about things like Celeste and Taverner and Hook Lake, etc., but maybe not today. I'm just trying to get the thinking in terms of, so expanding on how these JVs work and how your thinking evolves, changes. So if we can just maybe look at I think what you're going to get valued on in terms of what you push to spend your money on. You just raise some capital. Is drilling is rewarded when you make discoveries, clearly. Is moving something towards some kind of development phase in uranium at the moment, realistic in terms of that, saying that's the best use of capital, that's the thing that the market is rewarding? Because I've had many discussions about supply demand fundamentals, and I think we're going to talk in a couple of weeks about maybe the output from the WNA London conference symposium. Have you got a sense of what the best use of time and money is for you at the moment?
Oh, absolutely. I mean, we're all familiar with the
which is
it is taking your best shot at developing a resource, and
okay.
right? So, I mean, you've mentioned, I mentioned, we've got 10 projects for crying out loud. Where's the money going? Where are we putting it? Well, and understanding that again, we've got a pipeline of projects, and we don't know yet, and we won't know till we get back out there in January, where Dorado is going to lead us. So you can't just drop everything and jump. It's not time to bet the whole farm on something. We put our time and effort towards our best prospect of finding and developing a deposit. Right now, that's Dorado. That's the one that's showing. Number 2 might be some stuff out at Hook Lake, or number 3. So that is where the focus goes. But people get confused in thinking that, well, then let's just spend all $6 million on Dorado. Well, you can't do that, because then you're throwing darts. To take 2 drills out, and this is a problem. You try putting 2 drills on one target, you've got a mechanical problem there, because every time you pull a hole under the ground, you got to sit back and now figure out, where do I want it? Where's this one taking me? Because remember, we know the grade from the probing we do, and we're now looking at structure and real rock. And although we think we know where all those holes are going to go, it's not like a gold program or something where you don't know till you get your assays back. So you plan your 5 holes, you drill them, and then you wait till you get results back. We know hole by hole how to start vectoring things. If you've got 2 drills sitting there, and one's just pulled rock out of the ground, and now you're trying to figure out where to put the next one, but it becomes you're going to make a mistake, and you're going to start wasting holes, and you're going to start wasting money. There's a pace to this you have to keep, where if you get ahead of yourself, you really truly are wasting money. So we're going to put as much money as is effective and appropriate towards Dorado, number 1. That's the first priority. And I can probably say this, we're putting a lot more money on Dorado this year coming up than we did on our whole program this year on all of those projects. So, we are truly aiming the fire hose at Dorado.
Well, I think that's good, because you've had years of saying, we've got a big land package, got multiple targets, we're going to drill here, we're going to drill there, and it's kind of traded sideways, right? And then since the end of May this year, your stock is up 3 times. And that the genesis of that was that announcement about making a discovery hole with your IsoEnergy JV, right? So people respect and want a discovery, because it's a great headline. We found something, and now you're saying it makes sense to get after that and work towards some kind of resource number.
Absolutely, that's the number 1 priority. Having said that, we have other partners who aren't involved in Dorado. So if Cameco comes back and says, "Look, we got to follow up on that," that mineralization you found out at Hook, and we got to follow up on those structures that we haven't even tested just north of that stuff that NextGen's pulling out of the ground there. We can't say no. We don't want to do that.
But what does mean if? What are the discussions happening with Cameco, with Orano? What do they want to do?
Well, what we're seeing is that they've got a significantly more exploration budget in general than they have in past years. We're definitely seeing that. We won't know. They haven't given us numbers yet. We won't know until we're probably a month or so away from those meetings. We have provided proposals on Hook, and we're meeting them to do some preliminary mapping out of what we would want to do at Smart. But then they take all this back and they talk internally, and because they generally, the way they're going at it is they've got exploration's got a number, and then they just have to decide how they're going to divvy it up amongst all of their projects. So we've kind of maxed out on what we think you could possibly spend. We're giving them all the possibilities, and it gets kind of carved down from there. But we'll see what happens in the meetings over the next month or 2. It could be a very, very busy winter, because most of that work has to happen in the winter. So we're also balancing drill crews. How many drills can we get, and can you hang on to them until we know for sure, kind of thing.
Okay, so planning season coming up. You can tell us all about it when you know. Appreciate you making time for us today. Let's catch up on the broader market maybe next week if you're around. Okay.
Sure, that'd be great. Thanks, Matt.
Okay. Thanks, Chris. Bye.
Bye now.